Hi friends, Simit here from InformedTrades.com. In today's video, we're going to talk about dividend reinvestment programs, a way for traders and investors to accumulate stocks using dividends they receive and do so commission-free and often with other benefits. Let's get started. Okay, key points. Dividend reinvestment program, DRIPs, are a way to reinvest dividend payments that you get from stocks that you purchase that issue dividends. This concept is mainly designed for long-term investors, as we discussed in our previous videos. Reinvesting dividends can be a great way, the primary way that stocks can appreciate. So this particular strategy and the whole concept of DRIPs is relevant for long-term investors. And if you do enroll in a DRIP program, consider purchasing directly through the direct registration system. We'll talk a little bit about that. We have a whole video on the direct registration system as well. Okay, so what exactly is a DRIP, a dividend reinvestment program? How does it work? You can see it illustrated on the screen right now. Basically, the company pays a dividend. That cash that actually the company pays goes to a transfer agent. So for most people, 90% of the time, this is your broker that you purchased the stock through. However, it can be through an actual transfer agent who is managing the records for a company of who owns what stocks and things like that. And that's where you deal directly with a transfer agent if you purchase through the direct registration system, which we'll talk a little bit more about later in this video. But anyway, the basic idea is the company pays the dividend, that goes to the transfer agent or broker, receives the cash. That transfer agent or broker uses that cash they receive and purchases on your behalf additional stock. So that the idea behind dividend reinvestment is the dividends you get go right back into purchasing more shares of the stock that issued that dividend. So that's basically the concept at work here. And then, of course, you're mailed a confirmation statement or provided some type of online confirmation to show that the dividends you got were reinvested on your behalf for additional shares. Okay, DRIPs are a long-term strategy. Right here, it's on the screen right now. You see what would have happened if you invest in Exxon. This is in the first decade of the new millennium, 21st century. You can see that with reinvested dividends, your gains are considerably higher, about 50% higher. The thing with DRIPs is that the reinvestments are done automatically. So usually the day after your broker or transfer agent receives the dividend payment, they're going to purchase the stock on your behalf. You don't have that much control over when the stock is purchased. The benefit is that you are going to get it commission-free, which is the whole idea behind DRIPs, commission-free trading. But because you're just constantly buying it, you're not as aware of the price, right? All you know is that you're going to buy more shares with the dividends you get after the dividend payment is received by your broker or transfer agent. So in those situations, you need to DRIPs work best with a stock that you're willing to buy continually and hold for a long time. If you think the price is going to go up, over the long term, and you're not concerned with day-to-day fluctuations or even month-to-month fluctuations, that's what DRIPs are really designed for, because you don't control the exact purchase price. Okay, why buy DRIPs directly versus via broker? Here on the screen right now, you can see the options compared. Personally, I'm a big fan of the direct registration system. I think it offers additional security if you're concerned about your broker going bankrupt or mischief that your broker may be up to. DRS system offers some security in that regard. But it also offers some other benefits in the context of a dividend reinvestment program. It's more likely to allow you to buy partial shares of a stock. So if the dividend you receive only allows you to buy a third of a share or a fourth of a share of a given stock, the DRS system usually allows that to occur. It may also offer additional discounts. So some companies, they really like to encourage dividend reinvestment programs. They'll sell their shares at a discount to what the market value is if you reinvest your dividends. So you can buy, not only will you invest commission-free, but you also get those shares at a 5% discount or something like that, 10% discount, which can definitely be significant. And that's more likely to occur through the DRS system. There's also the possibility through the DRS system that you can deposit more cash and buy those shares commission-free and sometimes at a discount. So, if you have the option of depositing $1,000 more in addition to what dividends you're being given, then you can reinvest that commission-free and sometimes at a discount. So a lot of things about dividend reinvestment programs vary from company to company and from broker to broker. So if you do this all through your broker, it's more convenient. You don't have to fill out any additional paperwork. Most brokers offer a commission-free dividend reinvestment program, and some of them allow you to invest in partial shares. So in many instances, it's pretty similar to the DRS system. What usually you can't get through a broker is the ability to add more cash, although not every stock offers that option anyway. And the reason is the broker is buying the stock secondhand from the market already. So when dividend reinvestment programs are executed through a broker, they're taking the dividend payment that the company issues and buying it secondhand from someone who just happens to be wanting to sell at that time. When it's done through the direct registration system, it's the company itself that's issuing more shares, and that's sometimes why they're willing to sell it at a discount, because they're getting that money directly themselves, rather than some other trader who's selling it to the broker. However, all the details vary from broker to broker and from company to company. So if you're thinking about a dividend reinvestment program, you definitely want to consider whether you want to do it through a broker, or whether you want to do it through a direct registration system, as well as what company. You want it to be a company that you think will be increasing its dividends, that you're comfortable owning for a long time, and ideally, those are the two most important qualifications, but ideally, they offer additional discounts where you can add more cash and buy it at a discounted rate. You can buy partial shares, of course, it's commission-free, frequent dividend issuances, things like that. That's about it. Pretty straightforward concept, dividend reinvestment programs. Basically, it's a way of reinvesting at bare minimum, commission-free. Any questions you have, anything you want to add, join us at informedtrades.com. Help us out, help us make better videos by going to informedtrades.com/donate to make a monetary contribution. Also, liking this video on YouTube, sharing it on Facebook, Google+. That also helps us get the word out, helps us grow as well. Best of luck in your trading and investing, and we'll see you next time. Take care.